Hey guys, what's up? Peter here. Welcome to episode 44 of the weekly market outlook with TradeSprop, where we dive straight into the fundamental analysis and technical forecasts across different asset classes like currencies, commodities, and indexes, right? So without further ado, let's get straight into the video. Now, before I do get started though, I do kind of want to emphasize once again that here at TradeSprop, we have capital for you to trade, right? In this day and age where, Trump's in office, the market's extremely volatile, we don't think that you should be trading your own capital and putting it at risk. Instead, you should go to our website, tradesprop.com, which is really well made, by the way, I must say, and scroll down to the bottom where you can see a bunch of different account sizes and also account types for different asset classes like Forex or crypto. And then you can then see that we offer you different account sizes at different prices, which are very affordable for you instead of putting your own account at risk. Okay, so always do drop by to our website because your edge is our capital. Okay, so here we bring you back to the charts. Okay, let's kind of, recap what we have seen this week, right? So last week in the forecast, you may have been able to recall that I wanted the market to kind of break above this 200 EMA. Why is that black? Right here. Oh, right, this 200 EMA, and then I wanted price to hold above it convincingly. Okay. Unfortunately, I don't think this is what I would say convincingly because it is pretty choppy, right? Well, to be fair, a chop doesn't really mean that it's a bad thing, especially when Trump's in the market, right? It kind of reflects a form of a stable market sentiment, right? Because if you look at the VIX right here, the VIX has actually cooled down all the way to around 20.47, which is technically also aligning itself with its long-term average of around this price point right here. All right, so it's around the average price point, which is coming back down to the 200 EMA, which doesn't matter anyway because I don't trade the VIX. It's really just as a metric to kind of measure the amount of volatility in the market. So with this in mind, this does suggest that with the VIX dropping to this level, the markets may anticipate less crazy dramatic moves in the near term, right? Optimism is growing that the worst of the trade war fears, they may have already been priced in, especially with US UK trade talks yielding positive results, and also the upcoming US China the negotiations between US and China in Geneva. Of course, this could all just be blown out of the water and Trump could just be like, bam, no, I say something and I mean it, and I don't want to work with China, then this thing will probably skyrocket up again. Okay, but as of now, there's no major deal expected this weekend, which means that when the market opens on Monday, hopefully it doesn't gap me out on my positions. All right, and also yours. But yeah, with the trade talks, it does mean that we are going to see a step forward, hopefully, giving a more optimistic outlook for US stocks. So let's kind of get back into the S&P 500 right here. So the game plan is still the same. As you want price to hold itself above the 200 EMA, we are pretty extendedly bullish on the auto climate. So what this means is that we could see kind of a pause or at least a pullback before an expected higher continuation move, right? So maybe it would be nice if we could see the climate turn bearish again before turning bullish, because we are pretty extended compared to historical data, right? So for those of you that are interested, the AutoUFOs and also the auto climate, there are tools that we use in Tangent as one of our models for our analysis, right? So if you're interested in getting to know the tool itself and the people behind it, definitely do drop into the description and you will see a link there and you can click on it and it will bring you to the website. This is a patented technology, so it's really cool, right? It gives you objective and easy to spot areas of support and resistance. So yeah, definitely just give that a check out. But Right now, but this just stays the same. We could find some resistance around the 5.7K level. We could see a pullback into the EMA, and then we could bounce higher from there, because technically I am still cautiously bullish on the indexes until proven otherwise, right? We could also reject off of this EMA right here, come back into the 5.4 to 5.3K level, and see a bounce higher, filling in this UFO or this support right here. So either way, I want price to clear this level before expecting a higher price move up into clearing potentially all-time highs. Okay, and then after we clear all-time highs, then we shall see if the index rejects or not. Okay, so that is what I'm seeing for the S&P. Let's take a look at the NASDAQ right here. Okay, so for the NASDAQ, it is pretty much the same thing, but a bit less clean, because if you take a look at where we currently are, we are right in between these big areas of resistance, right? Compared to the S&P, there isn't two large levels, obviously. So definitely we could see it pull back a bit from here. We are holding well above the EMA though, but coming into these two areas, quite concerning. So what I think could happen is we could get an initial reaction lower, which kind of fits the narrative as well on the S&P. Maybe coming to this level, or maybe something on like the 4 hour, right? Oh, there's on the 4 hour, but something on the 4 hour or like the 1 hour, the intermediate time frames. See a pullback off of it, and then continue higher back above the EMA, and then sustaining above it, right? Obviously, we could also do that without breaking beneath and pulling back. We could just go straight up into this area right here and then reject off of it. So it all depends on what price action you see that supports your narrative on the low time frames. But definitely, at least based on the fundamentals, we are pretty much bullish on the indexes, right? The same goes for the Dow Jones right here. The Dow Jones is currently holding itself beneath the 200 EMA. There's no signs of any supports or resistances nearby, so this is probably the harder pair to trade out of all of them, right? Or technically the easiest as well, since there's no support, there's no resistance as well, based on the UFO at least. But obviously you could use your own knowledge of technicals and say that this is a resistance, this is a support. That all depends on your own systems and models as well. Alright, so that's pretty much it for the indexes, right? Expecting higher prices. Now we get into the currencies, right? So here we have the dollar index. Okay, so the dollar is actually showing signs of resilience, right? We are actually holding above the 100 mark now. I did mention last week that if I wanted to see price hold and be bullish, we had to be above the 100 mark. So this is a very, very crucial area of support. Okay, but why is it that we're seeing this support come in right now? Well, looking at recent econ data, we saw a stronger than expected services and also manufacturing PMI numbers. Adding on with that, we also have a robust NFP report at 177 jobs added. So that is crazy, right? That's really good. The unemployment rate, it also stays healthy at 4.2%, as well as a wage growth at 3.8%, which is currently outpacing inflation, right? The economic surprise kind of shows the dollar rebounding around here, right? Which is what we see on the charts as well, which just overall reflects the improving fundamentals, right? Now, I don't know if this is going to be the start of a bullish run like we saw the end of Q4 last year, because we have one upcoming data that's really important, which is CPI, which is expected at 2.4%. It will be quite critical in the near-term moves, right? A lower than expected print could reinforce the narrative of prices be normalizing, while a hot inflation number, it might push the dollar higher by breaking past all of these levels right here. Okay, so I want the dollar to stay above the 100 mark to be able to say that it is going to be heading higher, right? If this fails and then we break beneath it and we start trading beneath it, I think the dollar's gonna head lower into like 95, 97, right? Definitely into these levels, taking out this low. But if we do get a strong bounce and very convincing bounce from it, definitely we are coming back into the 200 EMA to retest the 101 to 104 levels. Okay, that's what I want to see from the dollar index, right? A sustain above 100 is crucial. Okay, you take a look at the EURUSD right here. It pretty much looks neutral, right? We're also just kind of chopping in between this. I want it to kind of come down now into this area of support right here at around 1.11 to see if we could bounce higher from it. But essentially, we're just kind of chopping in between. There's not much momentum, at least on the daily. And you know, we could just be correcting this move right now with the dollar also withholding some pressure upwards. Okay, so definitely key areas to look for next week are this area. If we were to come back down into it, could see a nice bounce off of it. Okay, so that is pretty much it for the US dollar. Oh, actually, alright, so here we have next week's data, right? We have no news on Monday and news every other day of the week, right? So the ones to look out for, I'd say, is definitely CPI from the US dollar. We also have the claim account change for the GDP, as well as GDP for pound and PPI as well, which always follows after CPI, as well as retail sales and also unemployment claims. So big data coming in on Thursday as well as Tuesday for the US dollar. So definitely keep an eye out for very, very choppy sessions before the news actually drops for the pairs that are affected. And yeah, you know, let's just keep an eye out on all of these news releases and let's review them when they actually come out and when the week ends next week. Okay, coming into the middle of May right now. So wow, quarter 2 is also pretty much there. You know, like we're almost coming into June, so that is crazy quick. Okay, so yeah, that's pretty much it for the currencies. Let's take a look at the commodities, right? What has gold been doing? Gold has been, this is not a position, I'm not in gold right now. Wait, I actually am in gold. Haha, I'm in gold longs. But anyway, that's besides the point. So gold, yeah, just peaking at this level, right? It's been retracing from its recent highs, but still, you know, it's within like a, let me see how, like a 10%, 8% range of its recent highs anyway, so it doesn't really matter. It is possible, of course, I think, for gold to come back to retest this high right here. But at the moment, the sustained upward movement or momentum is uncertain, right? Because we're seeing strong US econ data and we're seeing progress in trade talks, which essentially reduce the demand for gold, which thrives in periods of uncertainty. And when the dollar is really weak, that's when it, you know, performs the best. But of course, you know, I'm not trying to say that gold would, you know, dip from here. But at the moment, we probably will not be seeing any, you know, crazy runs like we saw in the past, right? We might see it just kind of like range in between this price leg right here, because it's not completely out the window that gold will keep flying, but it may be subdued as of now. You know, sure, we have lingering uncertainties keeping it at bay. Trump is always a wild card regardless of what happens. So at this stage, at least, you know, gold remains neutral for me. I am in a gold long, so I do hope it goes up to retest the highs, but longer term perspective or mid-term perspective, it is still neutral for me, right? I do think that it has a equal chance to retest the highs, or it could also just break beneath and do a pullback into the lower end of the range of this price leg right here. Okay, I do think that is possible. So take a look at silver, right? Silver, same thing. We are kind of sloping within this range right here. Curious to see if you could drop lower and then retest this range. You could probably get a good long up into these highs right here, but it all depends on how gold moves as well. But don't be surprised if silver does this, because silver technically moves more than gold on a percentage basis, historically at least, right? So that's definitely possible for silver. Take a look at crypto. Wow, crypto has been going crazy. My crypto positions that I DC8 down here are finally in profit. I held it quite a long time. It's almost like 2 months really. But right now, crypto is boom. It's going crazy, right? This big bullish move, I did not expect it to come in so soon. Okay, now looking at the technicals, we definitely do have a potential to retest these highs and maybe even break them. I don't want to say we could break them because I don't see an actual catalyst as to breaking and breaking all-time highs and reaching maybe 125k. But definitely looking at the price action, we could see it retest it at least, right? Because we're seeing the US legalizing strategic Bitcoin reserves, and all that global optimism is making it push higher than it is. The same thing goes for Ethereum. So Ethereum's getting pretty ugly. So Ethereum did retest the 200 EMA and is currently rejecting it kind of uglily. But we definitely could see breach higher alongside Bitcoin. I think most of the crypto markets is also going pretty crazy right now. So I would like to see price retest a bit before going higher. For Bitcoin, it's a bit different. For Bitcoin, it's a bit different. I do think we could retest the highs first before pulling back. Right, but if it does pull back, even better, you could get in a different position, being on side with the potential longs, right? But definitely, as of now, I am bullish on crypto, even though it's a mild bullish optimism, because trade talks are still ongoing, right? And if it's a bad trade talk progression, then it's a risk-off scenario anyway, right? So yeah, definitely waiting to see what we do next week. Okay, so yeah, I think that's pretty much it. Did I miss something on the weekly? No, I did not miss anything on the weekly. We're just potentially coming back down, retesting these high. Same thing that we saw on the daily anyway. So yep, definitely waiting to see what happens. Yeah, if you're still trading with your personal account at this point in time without having a proper account, I think that's something that's really, really something you should look into and potentially change your thinking. I do think that using someone else's capital, like our prop accounts here at TraxProp, is essential for you to not just potentially earn more money, but most importantly, mitigate your risk, right? So if you are interested in any of our products and how it works, definitely drop into our Discord channel and you can ask our staff and team members there on any questions that you may have. Okay, even if it's not account based, even if it's like technical based or trading related stuff, you could just ask me or any of the team. They are all traders that have created the company for traders. All right, so yep, I'll see you all in the next one. Peace out, stay safe, take care, bye bye.